you need to identify an important key level that can be easily seen. This price zone has held the price 4 times. When touching them, when price returns, and forms a double bottom pattern at the recently identified support level, this is a potential sign for a reversal. To confirm, you look for the neckline necklace at the nearest peak between 2 bottoms. When price breaks the neckline and creates a higher high, the trend change is confirmed. Now you can enter a smaller time frame to search for a buy order. Welcome back to Edward Trading Club. In this video, we will show you how to trade patterns from basic to advanced, and how I apply this strategy to XAUUSD that I invest and trade. Let's start with the first pattern, which is the double top pattern and the double bottom pattern. This is the structure analysis for the pattern. First, you have an upward price trend. Then price creates 2 equal peaks. These 2 peaks form a resistance level. The lowest bottom point between 2 peaks is called the neckline. So, what does the 2 top pattern say? From a price action perspective, it is that price cannot create a higher high, but instead touches the same peak level, showing the uptrend momentum is weakening, meaning buyer pressure has decreased. Conversely, in a downward price trend, price creates 2 equal bottoms. These 2 bottoms form a support level. The highest peak point between 2 bottoms is where the neckline is formed. So, what does the 2 bottom pattern say? From a price action perspective, it is that price cannot create a lower low, but instead touches the same bottom level, showing the downtrend momentum is weakening, meaning seller pressure has decreased. This leads us to the question, how to use these patterns as a part of your overall strategy. Below are the 4 core variations when using the 2 top and 2 bottom patterns. We start with the first variation, entering an order when the neckline breaks. With the double top pattern, the neckline forms at the nearest bottom. When price breaks the neckline and creates a lower low, you will enter a sell in the break direction, because now the reversal is confirmed. Conversely, with the double bottom pattern, the neckline is formed at the peak. When price breaks the neckline and creates a higher high, you will enter a buy in the break direction, because the trend change is confirmed. Next is the second variation, pattern formed at an important level. We consider this case on XAUUSD. First, you need to identify a key level that can be easily seen. This price zone has held the price 4 times. When touching them, when price returns and forms a double bottom pattern at the recently identified support level, this is a potential sign for a reversal. To confirm, you look for the neckline at the nearest peak between 2 bottoms. When price breaks neckline and makes a peak, the trend change is confirmed. Now you can enter a smaller time frame to search for a buy order to optimize RR. A noteworthy point is that you can use another way to confirm change, which is drawing a trend line, connecting the peaks, then waiting for a break of trend line before looking for buy orders. This method provides an additional tool, especially suitable for combined analysis. Conversely, you need to identify key level formed from an old reversal point, creating a resistance when price returns, and forms a double top pattern right at the resistance level. This is a potential sign for a reversal. To confirm the double top pattern, you find the neckline at the nearest bottom between 2 peaks. When price breaks the neckline and creates a lower low, the trend change has been confirmed. Now you can enter a sell order on smaller time frames to optimize the entry point. This is also a very good example of having many different opportunities to enter. Some traders might have entered a sell order right at this point, while others chose to enter a sell order at that other point. However, traders who trade by patterns will usually wait until the pattern is complete and price breaks neckline to enter. All approaches are correct, depending on your trading style. So, a 2 top or 2 bottom pattern at an important level tells you what? This type of entry has higher quality, because you don't just trade on the pattern, but also trade at an important level. This means you have both traders, trading support and resistance, along with traders who trade by patterns, thereby creating more momentum and enhancing trade quality. Stop for a bit. Please like this video to let me know that you like it. That is my motivation, to continue making better videos. We move to the third variation, double top or double bottom pattern. Instead of entering right at the break, you wait for an entry point on pullback. Back to the XAUUSD chart example, you had a double bottom. The neckline has been broken. Instead of entering right away, a second buy. When price pulled back to the new support, this is truly a very good level, because it was formed a long time ago. Now there is a very specific way to set stop loss when entering at breakout. But when you enter at the pullback point, the stop loss placement is totally different. Next we move to the fourth variation, candlestick patterns at key price, followed by a double top or bottom, appearing inside these candles. First you need to identify key price. This seen through past reversal points, where resistance is formed. When price returns to this level, you need to wait to see if candles appear at the resistance level or not. In the example, you saw a candle with a long wick at the key level. However, it should be noted that a price reaction at this level does not mean a trade order. Price may stall at the key level, forming candle but can still break. Don't forget, this is still a strong uptrend, so you need to observe inside this area. On smaller time frames, the goal is to find price action signals showing a trend change. This is a very important point. Before observing, you have no idea what you will find or if anything exists. So let's open a smaller time frame, specifically 15M next to this chart. On the left is the 1 hour chart, and on the right is 15M XAUUSD. The resistance level here on 1H is the same resistance on 15M. The area of the candle on 1H is also this area on the 15M frame. Reason to use lower frame, because on HTF, price movement too tight, no swings, to create good PA to help confirm. Meanwhile, on the lower time frame, we can see more data and identify the actual price swings. Here we have a perfect double top, formed right at important resistance. So to confirm the reversal, the neckline is placed at the swing low. When price breaks neckline and makes a LL, the trend change has been confirmed. At this break you move to shorter frame to find sell or sell right here and place stop loss above the pattern. With this method, if going opposite, in downtrend, the principle is the same. So we move to the next pattern, triple top and triple bottom patterns. Starting with the triple top pattern, this is an uptrend, then 3 peaks appear consecutively at the same price. Swing lows form the neckline. When price breaks support, you can sell, because the reversal is confirmed. Conversely, when price is in a downtrend and 3 consecutive bottoms at same price, the triple bottom pattern will form. Swing highs form the neckline. When price breaks resistance, you can buy. Using this pattern is similar to 4 variations of the 2 top 2 bottom pattern learned, so I won't explain in detail again. Remember to like and sub YouTube. How to detect early reversal via head and shoulders and triangles? Don't miss the techniques in part 2. I will reveal them right now.